Welcome to Middle Class Matters, Business News in English from Dr CMA Alagesan. Securities Exchange Board of India, SEBI confirmatory order in respect of Subash Chandra, the chairman, and Punit Goenka, the MD, in the matter of Z Entertainment Enterprises Limited. This is a confirmatory order. Part number 13. 46. As regards the role of entity number 2, I note that the relevant time during the period when the entire scheme was designed and implemented, he was MD and CEO of Z Limited. As per his own submission, Z Limited has renewed the fixed deposit on June 12, 2019 with maturity on September 10, 2019. However, the said fixed deposit was liquidated on July 24, 2019 within 1.5 months of renewal. Considering that he was in charge of day-to-day functioning of Z Limited, such untimely liquidation of a fixed deposit of INR 200 crore would have come to his attention, as in any case an intimation of liquidation would have been sent by Yes Bank Limited to Z Limited. Further, as already noted, as per Yes Bank Limited letter dated October 11, 2019, Yes Bank was in talks with the leadership team of SL Group regarding dues of the associate entities, wherein the possibility of liquidation was also discussed. Entity number 2 along with the entity number 1 has been spreading SL Group for decades. Thus, it would not be incorrect to infer that he was aware of the liquidation of the fixed deposit by Yes Bank even before receiving letter from the associate entities on September 18, 2019. It has been discussed in preceding paragraphs that the measures that were taken by entity number 2 were focused the procedural aspects of operation of a fixed deposit account and creation of fixed deposit. However, the genuineness of the current issue was the LOC issued by entity number 1, that is entity number 2's father. Further, the examination of related party transaction that was carried out by Grant Thornton India LLP had a minimum value of INR 23 crore, which left out the majority of the transactions under consideration in this matter, if at all the associate entities were examined. Thus, it can be seen that prima facie no effective step have been taken by entity number 2 to address the issue at hand, in spite of being directed by the audit committee to do so. Further, it was during his tenure as Z Limited as MD and CEO that the financials of Z Limited were misrepresented and the wrong announcements were made to the stock exchanges, as has been brought out in the interim order. Z Limited is involved in 3 of the impunged transactions which prima facie cannot be regarded as genuine transactions in light of the fact that SL Group companies or body corporates were involved in layering the fund transactions, or these are under the influence or control of entity number 2 by virtue of his and his family members' shareholding in them. This prima facie shows that he had to be involved in the designing and execution of the scheme, which has been found prima facie to be in violation of the securities law. The same also addresses the submission of entity number 2 that even though he had not issued the LOC, prima facie he was also instrumental in orchestrating the same scheme. 47. The above findings as regards to the role of entity number 2 clearly bring out his role in the prima facie scheme and also address the argument of entity number 2 that SEBI has only cherry-picked facts to establish his role in the scheme. Prima facie violations of LODR regulations. 48. The next issue that arises for consideration is whether the entities have reputed the prima facie findings of the interim order that the disclosure made in the annual report of financial year 2019-20 regarding receipt of funds from the 6 associate entities was a misstatement or misrepresentation. 49. It will be appropriate here to quote the relevant portion of LODR regulations. LODR regulations 4.2. The listed entity which has listed its specified securities shall comply with the corporate governance provisions as specified in Chapter 4, which shall be implemented in a manner so as to achieve the objectives of the principles as mentioned below. F. Responsibilities of the Board of Directors. The Board of Directors of the listed entity shall have the following responsibilities. 1. Disclosure of information. 1. Members of Board of Directors and key managerial personnel shall disclose to the Board of Directors whether they directly or indirectly or on behalf of third parties have a material interest in any transaction or matter directly affecting the listed entity. 2. The Board of Directors and senior management shall conduct themselves so as to meet the expectations of operational transparency to stakeholders while at the same time maintaining confidentiality of information in order to foster a culture of good decision making. 2. Key functions of the Board of Directors. 7. Ensuring the integrity of the listed entities' accounting and financial reporting systems, including the independent auditor, and that appropriate systems of control are in place, in particular systems for risk management, financial and operational control, and compliance with the law and relevant standards. 3. Other responsibilities. 6. The Board of Directors shall maintain high ethical standards and shall take into account the interest of the stakeholders. 7. The Board of Directors shall exercise objective independent judgment on corporate affairs. 50. The company at note number 5 on page 228 of its annual report for financial year 2019-20 has stated that the company had a fixed deposit with a bank of 200 million rupees during the month of July 2019. The bank had prematurely and unilaterally adjusted the amount of fixed deposit which were maturing on 10th September 2019 against the dues of certain non-group related companies, promoter group companies. Subsequently, these related parties have paid the said amount to the company along with the interest thereon amounting to rupees 25 million. The audit committee had advised the management to investigate the matter fully and take appropriate action. The report of the findings was presented to the audit committee and taken on record, and there were no exceptions. 51. As noted in preceding paragraphs, the entities have not been able to refute the prima facie findings that the impinged fund transactions were non-genuine in nature. Consequently, the disclosure made by Zee Limited in its annual report for 2019-20 was incorrect. Further, since the entities have prima facie benefited at the expense of Zee Limited and its public shareholders and were part of the board of directors of Zee Limited at the relevant point of time, it can be prima facie held that the entities have not acted in good faith and with due diligence and care and in the best interest of Zee Limited and its shareholders. Furthermore, since the interest of the entities were in direct conflict with the interest of Zee Limited and its shareholders, it can be prima facie held that they have not exercised their independent judgment while dealing with the issue of liquidation of fixed deposit by Yes Bank. Accordingly, they have also prima facie failed to maintain high ethical standards as board members of Zee Limited. Moreover, they had also not disclosed to the board of directors that they had a material interest in the transaction with associate entities that was directly affecting Zee Limited. Hence, their conduct prima facie failed to meet the expectations of operational transparency to shareholders of Zee Limited. 52. In view of the above, I find that the prima facie the above described conduct of entities is in violation of 42F11, 42F12, 42F27, 42F33, 42F36, 42F37 of LODR regulations. Prima facie violations of PFUTP regulations. 553. Another important issue that merits consideration is whether the entities have been able to refute with material facts the observation in the interim order that prima facie their actions have led to the violation of the provisions of PFUTP regulations. The provisions which are prima facie observed to have been violated by the entities are as follows: PFUTP regulations. Prohibition of manipulative, fraudulent and unfair trade practices, PFUTP. 1. Without prejudice to the provisions of regulations. 3. No person shall indulge in a manipulative, fraudulent or unfair trade practice in securities market. Explanation. For the removal of doubts, it is clarified that any act of diversion, misutilization or siphoning off of assets or earnings of a company whose securities are listed, or any concealment of such act or any evidence, scheme or artifice to manipulate the books of accounts or financial statements of such a company that would directly or indirectly manipulate the price of securities of that company shall be and shall always be deemed to have been considered as manipulative, fraudulent and unfair trade practice in the securities market. 2. Dealing in securities shall be deemed to be a fraudulent or an unfair trade practice if it involves any of the following. F. Knowingly publishing or causing to publish or reporting or causing to report by a person dealing in securities any information relating to securities including financial results, financial settlements, mergers and acquisitions, regulatory approvals, which is not true or which he does not believe to be true prior to or in the course of dealing in securities. 54. It has been submitted by the entities that the charging provisions of PFUTP regulations mentioned in the interim order are erroneous, as there is no material pertaining to dealing in securities or inducement to deal in securities or impact on price or volume. In this regard, I would like to refer to the order of the Honorable Supreme Court of India in the matter of N. Narayanan versus Adjudicating Officer, SEBI, decided on April 26, 2013, wherein it was held as follows. Prevention of market abuse and preservation of market integrity is the hallmark of securities law. Section 12A read with regulations 3 and 4 of the regulations 2003 essentially intended to preserve market integrity and to prevent market abuse. Securities market is based on free and open access to information. The integrity of the market is predicted on the quality and the manner on which it is made available to market. Market abuse impairs economic growth and erodes investors' confidence. A market abuse refers to the use of manipulative and deceptive devices, giving out incorrect or misleading information so as to encourage investors to jump into conclusions on wrong premises, which is known to be wrong to the abusers. Further, the Honorable Supreme Court of India in the matter of SEBI versus Kaniyalal, Baldev Bhai Patel and others decided on September 20, 2017 while dealing with the definition of dealing in securities prior to its amendment on February 1, 2019 held as follows. The definition of dealing in securities is broad and inclusive in nature. Under the old regime, the usage of the term to mean has been changed to includes, which prima facie indicates that the definition is broad. Moreover, the inclusion of the term otherwise transacting itself provides an internal evidence for being broadly worded. the Honorable Court, while dealing with the definition of fraud, held as follows. The definition of fraud under Clause C of Regulation 2 has two parts. First part may be termed as catch-all provision, while the second part includes specific instances which are also included as part and parcel of the term fraud. Like the video, please subscribe to the channel. Please share it to as many people as possible to spread the information and the knowledge on securities market and how the companies are manipulating. Thanks for watching.